Hey, welcome back everyone. It is time for another red hot covered call video. Hey look, this is the March 2019 CTP Dashboard newsletter. It's a covered call newsletter where I share some tips and tricks about my success in the stock market, hoping it ups your game. Now look, I always give an exclusive video in the newsletter because you put skin in the game. You went to my website, CTP Dashboard, you clicked on free newsletter, you gave me your email address, and I'll tell you what, that tells me you're interested, you're motivated, and you want to hear what I'm saying. And hopefully you'll enjoy it. So you'll learn it and you'll go out and do it. And what I mean by that is we're going to talk about opening up a small ball account. You know, recently on my channel, I did a video where I talked about going to New Orleans, having a mini reunion with a lot of my USS Gary shipmates. And I'll tell you, while we were out in the town having beers, having fun, one guy pulled me to the side and he said, "John, I really like what you're doing. I want to do it. I'm excited. But here's the deal. I don't even know how to get in the stock market. I mean, I don't even know what all that means. Can you step back and show me how to open up an account?" So that's where we're at. We're going to do this. This is a three-part series. Part one is I'm going to show you the basics and talk about what you need to set up your account. Now that's going to be an actionable task for you because when we do part two, we're going to start talking about buying our first stock and what all the lingo is. And I'm going to give you some tips and tricks as to using market orders versus limit. We're going to talk about the covered call strategy in part two. So I really want you to at least have opened up your account, and we're going to talk about funding it here in a minute, but at least open up your account. You have the ability to write covered calls when the time comes. So that's what we're talking about today. Again, it's a three-part series. This is part one. Now look, before I get going, if you've never been to my website, ctpdashboard.com, it's right there. I offer up tons of tools for free. The long story short, I was just like you 2.5 years ago, and as I was learning, I was on YouTube just trying to watch every video to up my game. Now, I always talk about my mentor, Jerry, and my mentor, Jerry, is right there. You can go to my website, you can watch that video. He is as big a part of my success as the success itself. So for me, he helped me, he mentored me, he stayed patient with me, and he walked me through it. He held my hand in this process, and I learned from it. Now, with that said, I was on YouTube really trying to get that little morsel of information to up my game. And here's the deal. I went out and bought a lot of the gurus, the various different gurus, products and services. I bought a website service, I bought a groom list. I spent hundreds of dollars. And as I started doing the trade and I started looking at their material, to be honest with you, as you learn this stuff, you don't need it. With that said, I did take many of the ideas and brought it together into what I now call my CTP dashboard, where I loaded up with the best stocks trading now. And what I've done is I've created a research spreadsheet or a research dashboard where we can research all of the stocks that we're interested in. It's not a static PDF file or a website that really leaves you wanting more. For me, it's all about owning that research, being accountable. So when I put my hard-earned money to work, look, I did my due diligence. I know what I'm investing in. So for me, I created the CTP dashboard so we can keep the numbers in front of us. Jerry also said, look, if you're going to do this on multiple stocks, multiple times, you need to create your little spreadsheet so you keep the numbers in front of you so you know when you're profitable. So I created all of these free spreadsheets that I offer up for you. They do everything from being a buyback calculator, a total income tracker for all your covered calls and cash secured puts. I offer up all the tools that you'll eventually need on my website, and I never charge a nickel. Now, with that said, before I move on, I don't want to say I'm bitter that I paid all that money to all those gurus. At the end of the day, the real feeling I got from all the gurus out there is that they just want to get you to the 20-yard line. And for me, I'm just like you. I wanted to get to the 5-yard line. Look, I realize at the end of the day, nobody's going to make the trade for me, but get me to the 5-yard line, get me closer. Well, a lot of the gurus and all the website software, man, they get you to the 20-yard line, take your money and say good luck. Well, that is why I stick with the channel. So I provide free content, show you my trades, we talk about them, so maybe you learn something. Because from my experience in life, if you show me how to do it a couple times, it's going to sink in a little bit more, just me reading a book. So that's why why I do the channel. I want to show you my trades. We talk about them and maybe you learn something, but also I want to tell you stories. I want to talk about the basic fundamentals of the strategy and do it straight talk style. I want to do it straight talk style because when I paid for all the gurus, secret sauces, so on and so forth, I noticed, they use the very technical lingo, things like intrinsic and extrinsic value and the deltas with theta. For me, it was a hurdle, right? It was a hurdle that I had to get over before I even tried the strategy. And what I've found from all the communications I get from you, man, you guys might give up. You might give up if you don't understand what makes up an option. So I've sort of come up with my own straight talk lingo, where instead of using, for example, intrinsic or extrinsic value, which makes up an option price, I'm sitting there with Jerry, we're talking about it, and he says, hey, John, that option has real money in it. It has time value in it. When you hear me talk about an option price, I call it real money and time value because that's how we talk, right? So I try to bring it to you straight talk style. I'm a guy just like you. You have to believe that. So look, I am a one-man gang, and I truly appreciate you're here. You come to my channel, you watch my videos, you bang that like button, because at the end of the day, it motivates me to do my next red hot cover call video. And look, if I didn't get that support, I'll be honest with you. I know this is an eye-rolling moment right here, but man, I'd be done with it. I tell you what keeps me going and the time I put into this really is the stories you give me, the excitement you have every time I do a video. Man, it jacks me up to do the next red hot cover call video. And it really is that genuine. What Jerry did for me, I'm paying it forward to you out there that want to up your game. And trust me, I've heard a ton of stories where people's lives have changed in ways that absolutely blows my mind. So thank you. Now look, let's go ahead and get to this. We're going to talk about how to set up your covered call trading account. Okay, we're going to start from the ground basics. Again, this is a informative video about how you need to set up your covered call trading account. We're starting from the very beginning. You're going to have to pick an online brokerage account. Now, the reason for that is because we need cheap commission fees. Now, what does that mean? When we buy a stock, right, brokerage is going to charge you some money for that. Usually the cheap online brokerages are going to charge you about $4.95 a trade. That's what we're looking for, because if we're only going to trade 100 shares and we might only have $5,000 to do this, hey, any little brokerage fee is going to chip into your profits, because chances are you might be making decisions where you might buy back an option and you might give a penny here or give a penny there. That's going to be profits that you're giving away. And if your brokerage then tax on other commissions, man, you just can't be profitable. So what we want to do is use a big US based brokerage. Why do I say big US based online brokerage? I'll tell you why. Because I watch a ton of YouTube videos where you'll have swing traders, day traders using offshore brokerages. You're just starting. So I want you to start with the huge US brokerages. One, they're familiar, they're in the States, right? They're a full service brokerage. So if you get involved in the stock market more than writing covered calls or cash secure puts, you might want to open up IRAs or a Roth IRA or savings accounts for your kids. For me, I'm going to keep it conservative. I'm going to stay with a US based brokerage. If you find when you get more experience, you want to use those offshore brokerages to save even more commissions, there are many to choose from. I'm going to recommend you stay local in the US with big US brokerages. Now that could be Fidelity, E-Trade, TD Ameritrade. All you have to do is open an account, answer all of their questions, and then you can ultimately fund your account later. Now, just a little heads up, they're going to be bugging you. They'll probably send you emails or maybe even call you. What's important is setting up our account so we don't have to do additional paperwork. And I'm going to explain that here in a minute. But we're basically going to go to an online brokerage, and in this case I have Fidelity here, so I'm just going to click open an account. And what you're going to see here is this. They're going to ask you multiple things that you may not know, right? You may not know what a rollover IRA, Roth IRA, traditional IRA brokerage. What you want to do is open up a brokerage account, okay? Let me say this. If you're going to do the covered call strategy in an IRA, a Roth IRA, probably want to make sure you know what you're doing right here. And I'll tell you why. Because remember, when you invest in traditional IRAs, Roth IRAs, the money has to stay in the account, okay? You'll hear them on TV talk about IRAs and Roths and all this, that, and the other. But what they never talk about is you can't take the money out, right? Or you'll be penalized. So you really have to determine right here what you're doing. If you're just opening up and asking after-taxed account, meaning the money you have has already been taxed. It's out of your paycheck. You're going to open up a brokerage account where you want to pull money out and spend it without penalty. Well, that's going to be a standard brokerage account. Now, if this is for a retirement account where you're going to trade it and you're going to defer your taxes, right? You're going to defer those capital gains. Then you're going to get into the traditional IRAs, the Roth IRA, because you're putting in after-tax dollars. You're able to trade within that account, right? You're never taking the money out. And the taxes, the capital gains are deferred. That's definitely Google what is an IRA if you don't know what an IRA is. I'm going to assume that you have after-tax dollars, right? You have money in a bank account. You want to open up a brokerage account. So as you use the covered call strategy, you can actually take that money out and spend it. Everybody asks me, hey, when do you pay taxes? Well, you pay taxes on capital gains. You buy a stock at $50 and it goes to $100. When you sell that stock, that's $50 of taxable appreciation, and the government will get their money. In a traditional IRA or a Roth IRA, we defer the taxes, meaning you won't be taxed right here, right now. But, when you fast forward many years later, when you do take that money out, you're going to be taxed as income. Now, a brokerage account, no, you are taxed right here, right now. So say, for example, we do buy a stock at 50 and in a month it goes to 100. Wouldn't that be great? If you sell that stock at 100, you are going to be taxed on that $50 appreciation. And that's going to go on your taxes for that year. Now, we're not going to get into taxes here. I'm not an accountant. But let's talk about the brokerage account real quick. Again, a brokerage account is where we're going to be able to send them money, whether you wire it, you send them a check, right? Or you show up at their shop, right? For example, I can show up at a Fidelity office and actually deposit money right there. So there's many ways to get the money in, but when we put the money in the account, it's going to get dropped into your brokerage account and it's going to sit there. It's in the account and we're able to trade it. And again, that's going to be in part 2. We're going to talk about that, but let's talk about right here in the sign up process, because this is a good moment right here to set up your account for covered call writing. If you do anything wrong, right? If you don't answer it right and get covered call privileges at this point, you could always call them. They will send you a PDF to sign, fill out. They will give you covered call writing ability. The covered call strategy is the most conservative strategy on Wall Street for options. The reason for that is you're covered, right? When you think of options, you think of high risk, buy some options and it can go to zero. You hear all the risk stories, right? With covered call writing, you own the shares. So you are covered if somebody were to take your shares from you. And you're going to find that that's how that works. If you have 100 shares of a stock and you write a covered call, and let's say a couple days later you want to sell the stock, well, the brokerage is not going to let you sell that stock without taking some steps to close your covered call trade. So again, you're covered. That's what really makes up this strategy is a very conservative one. Let's talk about the levels of trading, because understanding the levels of trading ability is important here. You have level 1 through 5 in most cases. They're going to put you in a level based on the answers you give them when you set up your account. So as you're filling out the account and you're putting in all the pertinent information about your name and where you live, this, that, and the other, they're going to start asking you questions like, how many trades do you make a year? What are your investment goals? And those are leading questions. Ultimately, they will put you in a level of trading because they want to try to fit you in a spot right at the beginning. So if you say you only do 1 trade a year and you're conservative and you're looking for bonds and yield, well, they're going to put you in the most less risky level just so you don't do anything wild and crazy. Right? Because if they put you in level 5 right off the bat, buying and selling options, that's just not what they want to do. So when you answer those questions, right? When you answer those questions, you definitely want to be a little more aggressive in your answering. These are all to set you up for options. Let's go ahead and look right here on screen. You could see here right on screen, brokerages are going to restrict their customers when it comes to options because, again, it is the most risky strategy on Wall Street. Look, you buy an option, that option has a true deadline or expiration where it can go to zero. We're writing covered calls, we own the stock, so really our true risk is that if the stock we buy falls to zero. Of course, if you're adhering to the golden rules of covered call writing, you're buying great S&P type companies, the likelihood of that is very small. Just to finish this up, let's summarize this. We want to have that online brokerage that has cheap fees. We want to use the big US-based brokerages. When you're setting up your account, it's very important to understand what you're setting up. If you're looking to set up a retirement account, an IRA, you have to understand it's tax deferred, but you can't take the money out. The money you make, you can't like scratch a check. If you do open just a straight brokerage account, you're going to be taxed just like everybody else with capital gains. You'll be able to take that money out. And here in the case of Fidelity, you'll see they have a cash management account like an ATM card so you can use the money you're making. If you find that when you set up your account, you don't have covered call writing ability, that's all right. Give them a call. They're going to send you a PDF file you fill out, you send back to them, and you'll have covered call writing ability. One last thing before I let you go, let's shelve the margin discussion for next time, okay? If you're new to this and you're a little more on the conservative side, let's hold off on margin. Margin presents all kinds of issues down the road. Now, look, if you're experienced and you use margin all the time, yeah, you'll have a totally different opinion about using margin, but for a lot of folks that have never set up a brokerage account, margin is something that just isn't comprehensible yet. But we'll be talking about that. So I wish you the best of luck. Now, look, this is part one. We're going to go into more detail about the strategy in part two. I want you to come back. This is going to be a three-part series. And in part three, we're going to do some trades. We're going to talk about what we can do on a more advanced level. But part two is going to be a great video where we really start to get your feet wet with the covered call strategy. Now look, before I let you go, if somebody forwarded you this newsletter and you want to be a part of it, well, there's a couple ways you can be a part of it. One, you go to my YouTube channel, Core Position Trading, subscribe to the channel because we talk about this every single week. I bring you timely and relevant trades. I show you those trades, we talk about them, so maybe you learn something. And look, if you want your own newsletter, all you have to do is go to CTP Dashboard, click on free newsletter, give me your email, and you'll be included in the next red hot covered call newsletter. Until next time, I hope all your covered calls are profitable.